Hey, greetings. Dr. Jeffrey Scott here. This is my Market MRI Pro update for January 26, 2026. Um, Doing this around 8:20 p.m. after hours. There were some negative earnings today. Um, Samina was one. There was also, let me see if I can remember which the other one was. Well, Samina was the big one, down 8%. The big thing that I saw was that a lot of the insurance companies were down significantly because Trump came out and said he was going to hold Medicare Advantage rates for payers the same going forward on the next year. Nucor was down 5.3 when they missed their earnings. It's that time of season. You got to be careful. And as my slide will tell you, you have to know what your earnings date is scheduled. You can't make a educated opinion of what to do with your stocks if you don't have um, the date. All right, let me kill my picture. You don't need to look at my mug. Let's take a look. So mega caps pulled the indices higher. They did, but it's one of those days where the markets are up and you go, man, I underperformed today. Fed meeting starts tomorrow, and we'll get the readout on Wednesday. Again, my name is Dr. Jeffrey Scott, marketmripro@gmail.com. Google Group's top-down trader, and my website's marketmripro.com. The sessions for educational purposes only. Any recommendations should be taken in the spirit of education, not investment advice. The intent of this video and pretty much all the videos I do is to show folks how I use my tools to accelerate my top-down analysis. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned. Trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades. And I've got tools on multiple platforms, but I am an independent trader. My Google group is called Top Down Trader. All you got to do is go to Google, sign into Google Groups, click All Groups, find Top Down Trader, link your account, and let me know how often you want me to contact you. The best part about it is you can unlink anytime you want. Why join? Because I will give special deals to users from time to time. I'll do closed sessions for users. But more importantly, every time I post something, I send a link to the Top Down Trader group so people know. All right, so let's continue on. Know your news and earnings. Obviously, Tuesday we got consumer confidence, but the Fed meeting starts, and I think a lot of people will be waiting more for the Powell speech because I think there's not going to be a change in rates. But the question really will be, is there more? Is Powell going to say things that the market likes or doesn't like? As I mentioned, after hours today, Nucor missed. Um, Samina, which is somewhere here, also missed. And it's important because when we have changes in earnings or we have earnings, it's a volatility event. And it can be a positive readout and the market, your stock goes up. A negative readout, you go down. If I have a cushion, I don't mind holding into earnings. If I don't have a cushion, I typically will close my position or part of it. It's never wrong to take partial profits. And there's some specific option trades I'll do around earnings. Maybe I'll talk about them on my Saturday mentoring. So it's a judgment call to hold stocks over earnings date. It's bad judgment to not know when your stock's earnings date is scheduled. And the rest of the week, United Healthcare going to take a hit tomorrow, like all the other payers because of Trump's comments. They're down 10%. Boeing, UPS, GM, RTX Corp. After hours, Texas Instruments, Seagate, Next Tracker. ASML before the market on Wednesday, GE Vernova, AT&T, just for a few. After hours on Wednesday, Microsoft, Meta, and Tesla. Thursday, MasterCard before and afterwards got a bite of the apple. And then Friday, you got SoFi and American Express. So it's a busy, busy, busy week. All right. So again, it is a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your earnings date is scheduled. No expectation of a January rate cut or raise. You could see this. I just downloaded this or took a snapshot on the FedWatch tool. $3.50, or excuse me, 350, 375 is the current place. Only 3.9% of those polled thought there would be a cut. Nobody thought there'd be an increase. I mentioned my mentoring session will be on Saturday at 10 to 1 or 10 to 2 Eastern Time. Spots are limited. I'll have the registration link in the remarks below. If you like to trade stocks or options, but your time frame is swing to position, I'll try and convince you why top-down trading is the way you should follow. So if you own my tools, you don't own my tools, I don't care, join. Maybe I can entice you into thinking how I think about the markets. So we're going to do an intro to top-down. We're going to show you how I analyze some of my favorite scans and how I use options as stock replacement. That usually takes 30 to 45 minutes. We pick the stock that I might be interested for Monday, and I'll show you the thought process that I go through. If you've watched my videos for any time, you would have seen how last year I did something I've never done before, which is I regularly reported out my performance. Probably peaked in October, pulled back some, and closed the year fairly strong. But I finished the year about 183% up on the year. Yes, I trade options. To have a 100% return on an option is very common, but to have a 100% return on your entire portfolio is a little different thing. I'll show you how I got there, what I did, and I'll just review my performance as well for those who haven't seen it. For more information about how I trade, what I do, what I'm talking about, marketmripro@gmail.com. If you have any issues with the product, Praveen at coding at marketmripro.com can take care of it. I can tell you that from time to time I'll have an issue, and 99.99999% of the time it was a bad data push. We purchased the data from at the enterprise level from a data provider. That data then goes through some normalization and other steps, and then it's pushed to the server. When we get a bad data bit, or whatever they call it these days, it can lock it up, and it's very easy to fix. And sometimes it fixes itself at the next data pull. That's inherent to all programs, unfortunately. But for otherwise, the stability has been great, and which is why the first folks that bought it, I called beta testers, and I extended their, or didn't start their 1 year time until the middle of the year. I will do some live education in 2026. I'll either do it late October or early November in the Palm Beach area. It's a great meeting. I have so much fun doing it. Maybe this time we won't have a hurricane thunderstorm, so we'll get to go out on Stocks and Docks, the yacht. But if not, I feed you and water you. Make sure you have plenty of alcohol to sleep at night. But anyways, love to see you. More to follow. Let's go take a look at the charts. So if we look at the market, and I've changed the computer that I'm using for these videos. I don't think you'll notice any difference. I was using a 3200 by 1800 machine. Then I swapped it to a 2.5K, and this is just a different 2.5K machine. If we look at the daily briefing, which is where I keep everything, you could see diamonds were up 0.64, spiders 0.51, Qs 0.44, and the Russell was down 0.31. So the Russell lagged again. In fact, if you look at the last 5 days, it's not down much, but it's down where the others are positive. Dollar was down another 0.5%. Dollars in free fall. I'm not sure that's a good thing long term. Volatility was flat, up 0.15%, and Bitcoin was down. I think Bitcoin futures must have switched months, because while Bitcoin was down on some of my programs, on CNBC it was showing green, so that should be worked out tomorrow. If we look at new highs minus new lows, I like looking at 12 months or 52 weeks. Still positive on the NYSE, which is great, but it was a tougher day on the NASDAQ, and you could see we're down to only 30. Still positive, but it's come down. If we look at the S&P 500 sectors, it was utilities on top, followed by communication technology, and then financials were the lead. The laggards were discretionary staples, real estate. So kind of a mixed day, but nothing was up or down more than 1%. If we look at themes, cloud computing, copper, cybersecurity, internet, um, more internet, our data center is still strong. Video games, software is starting to rebound, perhaps, renewable energy. If we look at the big laggards, you can see the big one down is cannabis. Why do I not care about cannabis? Because there's a lot of small stocks that move a lot percentage wise, but very little when it comes to absolute dollars. But because it's all over the place. And you could see over the last month or 2 months, despite some very big days, it's up 2%. Um, Metals and minings took a dump today, 4%, uranium 3.6, blockchain 1.32, China 1%, robots, and then you can see the rest on your own. Over here, I take the stocks in three different indexes, S&P 1500, the NASDAQ, and the NYSE. And I ask the question, how did it compare to the prior day, which would be Friday? Blue is today, white would be the prior day. Sectors versus the prior day, industry groups versus the prior day. So the good news is they're all higher. Okay, then why did I say a lot of people probably didn't see the gains today? Well, you could see here only 54% of the stocks in the S&P 1500 were up. Only 40% of the stocks in the NASDAQ were up, and 48% of the stocks in the NYSE were up. So at best, a 50-50 day in the U.S. markets. If we look at the timing model to see if we've had any change, we'll start with the daily. And the first thing that I'm noticing is that we turn positive on the spider. You can see down here, flip to a buy. We are positive on the Qs, still going to have to get above that trend line. The diamonds are still red, so still pulling back a little bit, but not far off their highs. And the Russell, which got very extended, is still in a buy mode. So I got 3 out of 4, which means we picked up one today on the daily. And on the weekly, all of them are long, are buys. So I think we're still long. A little bit of concern perhaps with the diamonds holding back. That's a little glitch there. And we'll have to see what goes on with that. But right now, I don't short markets that are 4 weekly ETFs up and 3 of the 4 daily up. But I'm a little cautious here. Not always the best seasonality as we end January. And as I've made comments before, I've had, last year was a great year. February was not a great month for me. I have bad memory, or good memory should be. The guppy charts, I just want to call out, I mentioned last week that we were as extended as I've ever seen above the various moving averages. And because of that, I got a little bit defensive, which meant I raised some cash. We're still really extended. I mean, look at how close or how far, which is pretty far away, the major indexes are. Look how far the Russell is. If we look at those US index ETFs a little bit more detail, let's just make it big so you can actually see it. So the spiders, nice run up, as you know. Lots of pullbacks, which is normal. Stopped at the 100, some stopped closer to the 50. This looks like it's reversed off the 50. And guess what? We've kind of worked off those sideways days and we're starting to get into strong seasonality. So spiders in a buy, looks good coming out of a squeeze. Looks like it wants to go higher. Qs, the problem with the Qs is that they're the furthest away from their all-time highs. But we're getting close to breaking that trend line. If we don't reverse there, and we have several times, and we break above, boy, that will make me a lot more bullish. It also will flip, probably the last ETF will come up. The diamonds, steady uptrend. Steady as can be, but, they have, I won't say struggled up here because that would be the wrong word, but they're they've pulled back a little bit, but breakout above that trend line would certainly be positive. Again, seasonality becoming our friend. Russell most recently set highs just a couple days ago. We're still on the daily charts, and then pull back. That's a reversal candle. In fact, I want you to look at that candle very closely, and you'll see why in a few minutes. That's a shooting star. What happened is we gapped up, we traded higher, closed back to where we opened, and gapped down the next day and closed down here. Now, I said that John Person calls that a low close doji, which I think his high close doji and low close dojis, especially on a higher time frame, are probably the best candlesticks that are out there. He'll teach you what they are. I'm not stealing his thunder. But it's also a variant of an evening star. That's a bearish setup. I felt good that I had the 21-day and the 21-day exponential and the 17 simple right underneath. You could see still a little sideways on seasonality here, but the Russell's coming off an all-time high. I don't think we're going to get this low. I think if this market doesn't sell off on Powell, the Russell, like the others, will just keep on going higher. But again, pulling back in an uptrend is very normal. The other thing to point out is if we look at this day, the high jump got up to 100. You look at this day, the high jump got up to 100. You look at this day, high jump got up to 100. What happens on each of these days? We sold off. So not a surprise there. You get extended, you sell off. Here is the VIX, and there's a couple things here to point out. Today on the VIX futures, they were up 0.37. The thing that's got me most concerned about the VIX is if the markets are going higher, then why is the VIX running up that trend line? That's a worrisome feature there. And then the dollar, a couple bad days. These are dollar futures. UUP, which is what I used to look at, had a distribution, and until our data vendor closes the gap caused by that distribution, I've decided to go to the futures. There's no difference. The pattern's the same. Now it looks like it's gone sideways and all that, just broke down here, but it's really not. If you pull back up, you can see the dollar's way off the high. And I remember, I think it was Kudlow was it Kudlow that liked a strong dollar? Well, he doesn't have it right now. So when the dollar's weak, it's time for commodities. But maybe the commodities are getting time to slow down. Gold, this to me is climactic. Is it a climax run? I don't know. I'll tell you after the fact. Does it look a lot like this day, this here? Yeah, and then it pulled back. Didn't mean it stopped running. So it looks to me like it's getting to a place where it's going to need to take a rest. I lightened up my gold and silver. I have a couple of gold stocks or mining stocks left, but I think we're getting a little bit ripe here. You want to see what real ripe looks like? Look at silver. Remember that candle I showed you on the Russell? This is a reversal candle. Who knows what's going to happen tomorrow? But if we get a gap down and close near the low, do we go back to the 21-day and 17? It wouldn't surprise me. It's a long ways away. But we reversed today, and when I see that, even though it was up on the day a lot, it was still up 5.84%. That to me looks like a reversal, and no surprise, gold futures are trading lower. I didn't see what silver futures were. Oil, well, we'll see if this time is different. It's holding above the trend line, but seasonality, at least short term, is not its friend. Natural gas, different story. Now, for the longest time, I was picking on natural gas that it kept failing at the 20, and I think it was at the 200. Fail, broke out, and really didn't do much. And then it continued to fall, failed at the 200. Well, what's happening here is we're breaking out from the 200 on decent volume. So I think natural gas might be changing its tune, but what's its high jump? 100. And now I'm going to tell you what won't make sense. I don't care. Why do I not care? Because when we're going from a downtrend to an uptrend, We've had a short-term big move, I'll agree, but we're certainly not extended in the classical terms. We're sitting on the 200. And then I think, what else we got here? 10-year down some today, that's good, and the 30-year down as well. I mean, there's some issues with Japanese bonds, carry trades, us buying yen, selling dollars. A lot of different things are going on right now, and I think that's going to cause some counter currents with the yields. And then, of course, we got the Fed meeting tomorrow and their announcement on Wednesday. Continuing on our journey, let's take a look at the buckets. These are a number of things that I look at to get signals of market reversals. I'm just going to say they're neutral. There's nothing here on any of these that says we're overextended to the upside or downside. Next one is market breadth. You could see how strong the NYSE is traded today to all-time highs, and looks to me like it closed at 829.14, 797. We might be at an all-time closing high in the NYSE today, and I think we are. But we're stalling here. We're stalling at all-time highs. Um, I don't have a high jump, but I will on one coming up. You could see the number of stocks above the various moving averages are kind of peaked. This one looks like it's potentially getting ready to roll over. The new high, new lows are still great, but the AD lines was negative and the up-down volume was negative. If I look at the NASDAQ composite, similar to the Qs, has got to break this downtrend. It's working its way up. It still has a lot of stocks above their moving averages, but it's heading down where this one's kind of flat. And its new high, new lows are down to 20, and their AD lines and up-down volume are negative. And I've got none of my signals firing today. If I look at the larger market breadth charts that I've been playing with, I just want to look at this green button or green flag, 0.85, 0.76, 0.64, and 0.53. So the markets 3 or 4 days ago, we were looking at very different numbers. We were looking at 93 here, 97 on the S&P 1500. We were looking at 81 on the NASDAQ, which was lagging, and we were looking at, what was this one here? 99 on the Russell 2000. When I get above 93, 95, I expect the market to pull back. So we've eased off of that, and I'm building out, let's see, had some, for whatever reason, my NASDAQ that I built out here disappeared on me. I don't know if it'll come back out, but I started looking at the high-low jump. So on the NYSE, the high jump is 87. So it's not 100, so it could still go higher. But you do notice the sideways movement there. All right, now, so I'll summarize my markets by saying we've had long runs. Looks to me like it wants to go higher, but we are in the heart of earnings season, so that may influence things a lot, especially on individual stocks. Dow and the Qs both have little short-term downtrends that have to resolve, but except for the fact that the breadth wasn't great today, I think the markets still look pretty good. If we want to know what's leading, lots of ways to look at it. Ratio charts, materials still leading, communications improving, energy is still strong, staples are strong, technology not anymore, industrials recently weakened, financials are weak, real estate weak, utilities, there's a glitch here, but they're holding their own. Healthcare has come a little bit off, and discretionary's had a little bit off. So it's really about materials and energy. If we look at sector timing non-ratio charts, so I made trading charts for each of the sectors. Let's take a look at them. Bitcoin, like I said, it was down today by most metrics. I think some of the future contract changed, and that might be why CNBC looked different. It's in a sell signal. The dots are all red. I'd like to see Bitcoin go up. I usually do better when it does, even though I don't own much. Technology is going sideways. Discretionary, it's in a buy signal. It's above the moving averages. Very different now than it was back here. Communications, after selling off, think Meta. It's moved back up, looks just like Meta. Now in a buy signal. Industrials were the leaders, weakened a little bit last couple of sessions. Financials sold off after the bank earnings are still in a sell, heading down. Energy continues to go higher, although two white candles that are opaque tell me that markets were up both of these days, but they closed at the bottom of the range or at the bottom of the body. Materials, the king, up day even though they closed near the bottom of the day. Energy pulled back to the moving averages and bounced. We'll see which way it goes. Utilities have been weak in a downtrend. And staples really broke out, become more defensive. And then this is healthcare. And healthcare is in a nice uptrend. I think it's at risk tomorrow with what Trump did or said. And look, I'm in healthcare. My business is in informatics, healthcare informatics. My customers are big pharma, biotech, payers, and I'm trying to be disruptive in healthcare, driving patients better outcomes and lowering costs when possible. We have a very expensive healthcare system, and I'll just leave it at that. Key stock timing. I decided to look every day at some of the most popular stocks, plus I have a few of them. So Amazon, I own. Earnings are coming. Trying to move higher. It's in a buy signal. You can see the green bars there. Not real exciting today. Apple, yeah, Apple was selling off. It had a big gap up today. I think it had some upgrades. Be interesting to see if Apple can regain the moving averages, but it's well below the 50, not just the 30 and the 21 exponential. Google, I have a position here. Google's probably the strongest of the bunch. Nice day today. Meta, remember I told you communications looks just like Meta? Well, Meta is in a beginning or middle of a pretty strong move going into earnings. Netflix, not so much. Netflix continues to struggle with its Warner Brother takeover and war with Paramount over it. Tesla, Tesla rallied and then failed right at the moving averages. I guess it's waiting on earnings. Nvidia, speaking of waiting on earnings, it's almost like it's on pause. It thought it was going to rally today on the CoreWeave news, which is still strange. Big investment in CoreWeave. But I think Nvidia is all about the earnings. The other thing it's going to be about is we get Meta, Apple, and some of the other big cap tech names. What's their CapEx spending doing? Is it still strong? And then the other thing to start hearing is what's going on with Google and their chips and some of the others and the server chips that they're making. Microsoft rallying. Talked about I bought it on Thursday last week, had another good day today. It too is going into earnings. And I got to look very carefully at this and probably take off some before earnings, as I have a little cushion, but a little cushion is not a lot on a price stock that's 500 bucks. Labu Biotech, it's interesting. This was a white candle, and then at the end of the day, it dropped down. It was just off a bit. The fact that it's an open red candle means it closed at the high of the body, not at the low. Biotech's had a massive run. I've taken some off. I still have some. PPH Pharma pulling back a little bit. I think Novo looks interesting with their oral Wegovy here, and Gilead looks strong. Data centers, the good news is Really positive day. Bad news is it's got that same candle here, a shooting star. Now you could see it had one here, it didn't matter, but this one formed sort of in the prior body. There wasn't a big gap up, a little gap up. It'll be interesting to see. Here was kind of one here when the market rolled over. I hate that candle if I'm long. And then you could see that defense and aerospace selling off into their moving averages. Technically, it's still a pullback in an uptrend. That's just some of the sectors and stocks that I like focusing on. And lastly, we go to the JAS layout. We're at 30 minutes. And we have 3,737 stocks that made my filter. That would be all stocks in the NYSE, NASDAQ, and Amex, and with a minimal price of $1 and volume of 100,000 shares. If I go into the top down, you can see each of these are put into sectors and industry groups. And if we look at performance today, for example, let's take the top four: tech, healthcare, utilities, and financial services. And we'll just take the top three. These would be the industry groups in those three sectors, and let's look at those by percent return. 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. So I got 423 stocks. That's a lot of stocks in the top 10 industry groups in the top three sectors. Now I'm going to come in here and stick a $5 and a 500,000 share on it, hit OK, and I'm down to 232. So if I'm just going to stick to a pure top-down analysis, I'm going to probably want to fish in this group of stocks here. I could look at one-day return. The problem is I can't buy that. I mean, this thing blows me away. I saw this after hours on Friday and couldn't figure out what was going on. Africa AIDF fuels investor buzz. Okay, I would have to do a lot of reading on this to decide why a stock which was doing nothing for a long time rallied from less than 10 to 60 in 3 days. Hard to imagine. PTRN, also an IPO breaking out above the 50. It does have volume breakout momentum, good relative strength in OBV. Zoom, I think Zoom had earnings. Let's look up here. Earnings. Nope. What was their news? That's why. They were talking about how they put in 53 million on the news on CNBC, and it's now worth 2 to 4 billion in Anthropic. Saw the same thing with one of the rocket companies who had a piece in SpaceX, and looking at what that valuation might be worth. Well, that might be something to look at. DOCN, DocuSign, or DigitalOcean, beautiful run up, gap up. But I'm looking for things I can buy tomorrow. And these things have all run. Kingsoft breaking out above the 200, CoreWeave. So I could look at percent return or change here. This was percent return. How about looking at number of positive impulses? So .NET, Cloudflare, pull back to the 200. Great seasonality here. Whoa, look at that seasonality. You're buying a stock in a downtrend, deep pullback. Great technicals down here. You got a CPR, gap, volume, breakup, momentum, relative strength, and OBV. I like to see it clear the 50. I might put that on a list. OGS, a natural gas utility, got a break above the 50. DigitalOcean, big gap up. What was the news? So some advisor just spent 155,000. That's it. There's Zoom, TENB, Tenable. If I put my click there, I can see what it does. Cyber exposure solutions and around the world. Big downtrend. I don't like buying downtrends. Recent IPO, Pattern Group Inc. Don't know what they do. Put it up here. Too new. I don't have anything. GTLB, GitLab, broke out of this downtrend here. It's running up. Lots of blue dots. It's starting to look interesting. Fastly, big pullback. I don't think I'd touch it till it breaks above the 50. Comvault, again, a pretty significant pullback. It looks like it wants to move here. It's got the 200 overhead. The next earnings are January 27th, which is tomorrow. Let's make sure they didn't come out already. They're going to have 98 versus 94. I'd let the earnings come and go. CrowdStrike, this thing, let's put it on a weekly. Been a great stock over time, and it's kind of stock you want to buy off the 50-week moving average. So CrowdStrike setting up at a place that might be interesting. Look at the strong short-term seasonality into the middle of February, and has a breakout momentum, has a squeeze, and the relative strength and OBV are setting up. Arista Networks is another one that's breaking out as well. Another thing I like to do is just rank them by 5-day momentum. Gives me a little bit longer vision, not just buying a 1-day popper. There's your Benet again, forget it. Meta, as we talked about, starting to move, getting interesting. There's Zoom, there's Net. Seagate's got earnings tomorrow. What a great run it's had. It'd be interesting to get a read on how data center is doing. LIF, Life 360, I think that's the new Norton antivirus. DigitalOcean, it's great, but it's gapped against me. And even Microsoft made the list. So there's a number of ways to build a list and then go down them and look for optimal buys. That's top down. That's where I get some of my best trades. Why? Because if I'm buying it top down, that means I got the industry group in my favor, the sector in my favor, and the market in my favor. But sometimes I'm a normal human being and I can't help myself, and I do bottoms up, meaning I ignore sectors, industry groups in the market. I go to the impulse list, and let's just take a look at my scans. Scan number 1, A plus. I have noticed when I get 2 momentum days in a row, I am typically finding a stock that is going to have a move. And the beauty is the momentum dots are the ones right above the yellow line, so I can go back historically and see how they've done. Here is CSX. It's been flip-flopping, which is my only concern. Earnings are out, which is nice to see. And they came in at 39 cents, not a lot of growth on earnings or revenue, and no surprises there, yet the market is taking it up. So that's one of those that wasn't as bad as it could be type of reports. Analyst upgrade, target 41, not a lot of movement expected there. But when you get this double dots and the relative strength is above the moving average, OBV is above the moving average, and you're not extended, you're at 82, that's been a good buy signal. I'd also note that you're kind of in an area of multiple tops, so not a beautiful one, so I'm not interested. Let's take a look at the A trade. These are more traditional pullbacks and uptrends with breakout with momentum. AES, big gap up, sideways move. Is it getting ready to run? There's your squeeze, a breakout momentum with relative strength and OBV. Arista Network, we've looked at this several times. ASB, Associated Bank Corp, nice recovery day, but a big down day, not interested. Cocoa Water, okay, here's one that's probably the best looking stock of the night. Uptrend sideways to the 50 and a breakout. It's got a CPR, volume, breakout momentum out of the squeeze, good relative strength and OBV, and not extended. So if this was Saturday, we'd be working up Vita Coco Company. Now I look up here, earnings are not to February 25th, so I got lots of time. And I look up here and look at the news. A promising yet expensive small cap. All right, probably worth taking a look at Coco. IMVT is a biotech. We got a new Fibonacci tool. I was playing with it today. Well, I should have been working. But uptrend sideways move, and it's doing the same thing, potentially breaking out from the 50. Land's End, I'm surprised they're still even in business. Big gap up today. Was it an earnings day? Probably. Let's look and see. Earnings were last week. No, earnings were last month. So what happened today? And they had decent surprise and good growth rate. Major deal. Joint venture with consumer brands from WHP gives Land's End a cash infusion and could drive expansion of the brand. Hey, that's good news. That might be something to think about chasing. So Land's End. So I'd have Cocoa, maybe Land's End on my list. Syndex. There used to be a company called Syntex, which was one of O'Neill's best stories. But similar to the others, uptrend pull back to the 50 and a breakout. Here's seasonality. It's strong. Volume breakup momentum from a squeeze. I like that one. Sarepta, been dead forever, had a little bit of a hiccup. Positive today and some positive data in ambulatory Duchenne's dystrophy patients. That's interesting. It's just one that's been so fraught with regulatory issues. And then lastly, VLY, Valley Bank. Here is, and they must be everywhere because we have them here too. And believe me, you can't have a valley without mountains. And I live in Florida, yet we have Valley National Bank. Here's a nice uptrend. Here's the candle we don't like, pullback, and this is something I might put on a watch list. So if I had to find my favorites of the night, I think they're Cocoa, probably Cocoa number one, Land's End because of the news, SNDX, similar pattern as Cocoa, and then a question mark on IMVT. I just don't know enough about it, and this part worries me. Bad seasonality. How do you like the fact seasonality on the chart, every chart I look at? Have an awesome, awesome night. We'll do this again tomorrow. I'm trying to get these down to 30. I just talk too much. Take care, everybody, and come see me on Saturday where I will talk a lot for my mentoring session.